Redfin CEO just said that the housing market is entering the strongest buyer's market in over a decade. And most people have no idea what that means. From Trump declaring the housing market crisis, to falling prices, to more negotiating powers for buyers, this interview had some shocking takeaways. So let's break down what he said, what's true, and what you need to know if you are buying and selling right now.
Is there a housing crisis?
Well, he's right and he's wrong. I think there is a housing crisis. One of the reasons that Donald Trump was elected is because so many young people can't afford a home.
That's right.
So he's right to focus on that. But I think complaining about falling home prices isn't the approach that I would take. Because, of course, for homes to become more affordable, the prices need to decline. We've talked about this on your show before. When the price of bread or gasoline falls, people host a party. But when housing prices fall, calamity. And I don't think that's the way we should think about housing. We're obviously divided on this because half of Americans, half of the world owns a home and the other half doesn't. So the people who own a home want to keep the price of that home high. But even now, we are seeing deflation. Home prices are up about 2% year on year when inflation is about 3% year on year. So in real terms, homes are getting more affordable in markets like Texas and Florida where builders have been busy. Actual home prices are falling. So we shall see what becomes of that. But for me, it's a good thing that home prices are falling. It means that the American dream is becoming more attainable for people in their 20s and 30s.
When it comes to housing affordability, there are three factors that impact it. One will be price, wages, and rates. So if we see prices go down, wages go up, and rates come down, overall affordability will improve in the housing market. Now, one thing that he said is that when asset prices fall, people tend to panic, and I could see why with real estate this is true. Because people have a significant amount of wealth that is currently tied up in their real estate and or their primary residence. And we're still sitting on record levels of equity. So if you see the prices come down, people tend to panic because they worry about, what their next move is going to be. And so much of their wealth is tied up in that one single asset. He also mentioned that the median house price is up 2%, but inflation is up 3%. So in real terms, prices are actually down. That goes back to the affordability that we were talking about there a minute ago. So the nominal prices of real estate can stay the same and or go up, but affordability can still improve if, let's say, wages go up and mortgage rates come down. The CEO of Redfin may have a little bit of bias with regards to having home prices come down because he runs a real estate brokerage. So as real estate becomes more affordable, we're going to see the transactions increase. And that's how real estate agents, loan officers, real estate brokerages, title companies, this is how they essentially make their money, is by transactions, not necessarily by high prices.
How ultimately will the Fed pivot affect the housing market? Mortgage rates are already starting to come down a little bit. Will it come down more, Glenn?
Hard to say. Again, I think the challenge that the Fed has is it has so many economic indicators that it's looking at. The mortgage markets are very efficient, so there are all sorts of Fed watchers who are trying to price in different factors, inflation and jobs and the prospect of a recession. So really, the Fed is going to do a couple more rate cuts, but all of that is already priced into mortgages. And the real question is, some economists predicted that tariffs would have a big impact on inflation. That hasn't quite materialized yet. Some of the retailers have been under earnings pressure because they've been absorbing that cost. They can't do it forever. So at some point, we may see some pressure on inflation, but it's being offset right now by housing. That as home prices fall for the first time, we are seeing housing have this deflationary impact. About 40% of the inflation index here in the United States is comprised of housing, 50 depending on how you measure it. So there are puts and takes here, and all of that right now is priced into a mortgage that's around 6.3%.
He made some very good points here. The Fed funds rate does not necessarily dictate where mortgage rates are going to be headed. And if you want a very good predictor of that, just watch the 10-year Treasury yield. And to his point, the investor sentiment is pricing this into the market already. Mortgage market is very efficient, and so it tends to front run what the Fed is going to be doing.
You wrote to me summer 2025 was the strongest buyer's market in over a decade. So what specifically happened this year that wasn't present maybe 10 years ago in 2015?
Inventory. So we've been inventory constrained for more than a decade. I don't think there's been this level of canceled home sales since 2013. There hasn't been this ratio of buyers to sellers since the end of the great financial crisis. We just have way more buyers out there than, excuse me, I said that wrong. Way more sellers out there than buyers right now. There's a bunch of people who couldn't sell their place in June and July. There were many buyers who thought they were going to wait for rates to come down. Rates came down, but maybe not as much as people hoped. And now there's just significant inventory that's probably going to sit on the market until the end of the year. So that means that there will be continued downward pressure on prices. It's really hard right now, David, to bring buyers and sellers together because the sellers are thinking about what they could have gotten 6 months ago in April, March, February, and the buyers are thinking, gosh, time is on my side. If I wait another 6 months, how much lower could the price be?
Based on what I'm seeing locally, I would agree with almost every single thing that he said here. Inventory was constrained. There were significantly more buyers than there were sellers. That has reversed. Now we have inventory that is sitting on the market and we have not as many, or fewer rather, buyers. And so it's just that whole supply and demand equation at play here. Cancellations are definitely up. I think that what you're seeing as far as sitting inventory is that you have some wish pricing out there, or at least in my local market. Home sellers are tending to look out the rearview mirror and see what they could have got 6 months or even a year ago, while buyers are looking out the front windshield there, thinking that rates are going to continue to fall and prices are going to continue to decline.
What are buyers thinking right now? Your data suggests or shows that buyers have now $20,000 in purchasing power more or gained $20,000 in recent months. And yet they're still waiting on the sidelines. What are they waiting for, Glenn?
More negotiating leverage. So buyers are putting in offers, but they're just putting it in for another $10,000 or $20,000 below the asking price because they think that's where the market is headed. So once the market hits an inflection point, people freak out. You know, if prices just go up and up and up, a buyer is lined up and ready to pay because he just thinks if I don't get it now, it's only going to get worse for me. But when you do get into that situation where time is on your side, everything about the house has to be perfect or you're going to walk away from the deal. And just coming into the deal, when you make the initial offer, buyers have gotten significantly more aggressive and put out terms that sometimes their agents are a little ham-fisted about presenting.
Buyers certainly have more negotiating power right now. They are being more selective and more aggressive, at least what I am seeing anecdotally. Offers are coming in lower than expected. That sort of disrespectful offer, if you will. And most sellers are meeting that with resistance, of course. What generally happens is that real estate moves very slowly. So it takes a long time for buyers and sellers to get on the same page. It's kind of a psychological game, if you will. All right, so here are the key takeaways from this interview with Redfin CEO Glenn Kelman. We are entering into a buyer's market that we haven't seen in more than a decade. Prices are falling, buyers have more negotiating power, and yet homeowners still are sitting on a record amount of equity. Whether you're buying, selling, or just waiting, this market is full of opportunities. Let me know what you think about the housing market in the comments below, and if you found this video helpful, we'll see you on the next one. Take care.